Welcome to our new episode of Blockrevision. Today I'm uploading an offline version of our episode, as I'm just introducing some tweaks into a regular episodes that will be broadcasted in the days to come. So right now there is a short version of Blockrevision episode being broadcasted today, but tomorrow we'll just return to our normal schedule. However, there will be shortened as well episodes, not extending 30 minutes. I guess 30 minutes episodes that will be possibly more suitable for you to listen and watch. So I find the improvements to being introduced as a useful one. However, you might also put some info in comment section below, and also I would like to listen to your feedback. So today, not putting this any times longer, just let's begin. And we are quickly jumping to market movers section. Today we'll omit the economic calendar and crypto outlook, but tomorrow will be extended version of those two sectors. So reflecting market movers, events, the most important events that hit up market previous and the current week. So on 29th of July, the Friday's edition of our series, we've ended up on that day. We could find from Germany, unemployment rate has topped to the highest gauge been noted since October of 2021. That gives us back some concerns about the stability of the labor market in the center of Europe. In terms of another gauge, we had from Euro area GDP growth rate, and that one was better than expected and turned out to be at 4 points year over year. So that was flash for quarter two. However, in July, year over year, inflation rate was at 8.9%. So it means that right now we are steadily growing into this negative territory, but we are still far from 10%. However, with the pace of growth, we'll reach that level already in October. So we are not that far away, but right now we still have some room for that. This 10% level might be very important psychologically for the whole Euro area. However, we have surpassed the highest levels ever been noted in this economic zone since the day it ever been registered. So that's everything that doesn't bode well for the future. But Mrs. Lagarde, as speaking, has probably some plan. We will find out what would it be. So from Canada, our GDP month over month was also better than forecasting. That's why we are seeing right now rebounds on major indexes around the globe. Some of the economic data turn out to be better, either it's from Euro area or from Canada. So personal spending in US, it has been at 1.1%. It's also kinda good, and the PCE price index month over month for June was also higher than expected. That was also something of kind of that 1% is not much of a deviation from the forecasts, but also gives us some troubles regarding of what the scenario might be tackled by government. Alright, so that was the previous week, but as it's Monday, we are just heading approach to what this week this first week of August may bring to us. So from Germany we already had retail sales that was lower, so it means that technically speaking, sentiment among investors still among consumers still getting worse. So minus 1.6%. Regarding of what was back in April, it's not maybe that low, but still nothing from stabilizing scenario right here. We are right now revolving around more time being under the water than above the neutral level. In terms of Monday, we already had also S&P Global Manufacturing PMI from Euro area, and that one collapsed below 50 points. So it's something that may spike more debates about the possible recession in Euro area within next 12 months. Let's getting back to economic calendar. We will have on Tuesday the consumer confidence from Switzerland, and we have some Fed members speaking, but that's not maybe something of very much of importance. We have unemployment rate from New Zealand from Wednesday. We will have very important retail sales from Euro area and the inflation rate from Switzerland, as well as ISM non-manufacturing PMI from US. That's also very important to maintain above 50 points. Otherwise, there will be more concern about the possible of economic rebound after this liquidation taken off the table. Fed's liquidity taken off the table. In terms of next day, that is 4th of August, we'll have a balance of trade from Canada. Also, Bank of England interest rate decision that's expected to hike its rates by 0.5%. And as of next, we have balance of trade from US, and from Friday we have unemployment rate from Canada and unemployment rate from US. So that's it. These are the most important market movers that may shake or spook the market in the coming week. However, I do expect rather more calm moves on the market this week, as it should stabilize after this very hot previous 1 week full of economic data. So right now I'd rather expect the previous tendencies on the major indexes to be prolonged, and right now we'll just have a look at the most important indexes in terms of kind of market outlook. So I wouldn't I would like to just have a look at economic market outlook in order to point you out what are the most important things the investors might be watching this next few days. So we are starting up from VIX, that is volatility S&P 500 index, that's right now rebounding out of this lower band of this triangle being formed since beginning of the year, and that would mean if we rebound the next stop might be right at the 30ish level. So it means that another wave of anxiety is coming into the market. But by that time, we still have at first need to test the lower band of the trend that already been broken, and I do find that there is rather a little bit less likely to get above 30 because there is a very I would say important trend line being drawn back since beginning of April. So I do expect maybe a rebound on VIX, but not to the levels been seen previously. SPX right now is fighting for getting out of this 4,200 levels. I would find the market to maybe hang on for a while before moving upwards, but I do rather expect this one to continue the rally over during next sessions. So for today, VIX and SPX are the very important indexes. However, I do find also a very nice occasion, trading occasion in natural gas futures that right now is forming a pivotal formation, where after this very strong pivotal candle we are reverting and finding another lows right below the recent supports being formed at 8.1 points. So right now I do expect that natural gas will maybe stabilize after breaking out this support maybe for 1 or 2 sessions, and right after it would probably continue the march toward lower levels, even down to 7 points, and maybe even up to down to the levels I have taught in one of the previous episodes, back to 5.5, and that's kind of a decent odds to gain in this quite volatile market. However, remember about stop losses. If I would hit it, I would just put it right above this 8.1 level somewhere, for instance in the on the level of half of this power candle being formed right there on the 29th of July. So that's a kind of a speeded up version of trade idea and also market outlook section. Today, as I've spoken, the episode is a little bit shortened, but tomorrow we will get back to longer videos, but also not lasting in duration more than 30 minutes, I hope. So that's it in today's video. Thank you very much for watching, and see you tomorrow.